Hey everyone, welcome back to StockWisp, your go-to channel for smart investing tips that actually work. If you're new to investing or want to grow your money steadily without taking crazy risks, you're in the right place. Today, I'm breaking down the best low-fee index funds you can invest in for long-term growth in 2025, especially if you're a beginner in the U.S. market. First, let's quickly cover what index funds actually are. Index funds are a type of mutual fund, or ETF, that track a market index, like the S&P 500 or the NASDAQ. This means when you invest, you're basically buying a tiny piece of hundreds of companies, spreading out your risk. And the best part? Index funds usually have very low fees, which means more money stays in your pocket. We understand why low fees matter. Here's the deal. Even a small fee difference can cost you thousands of dollars over time. For example, a 1% fee might sound small, but over 20 years, it could eat up a big chunk of your returns. That's why investing in low-fee index funds is smart. You keep more of your gains, and your money compounds faster. The main part of this video is top low-fee index funds to consider in 2025. Now, let's talk about some of the best low-fee index funds for 2025 that beginners in the U.S. can consider. Vanguard Total Stock Market Index Fund, VTSAX/VTI ETF, covers the entire U.S. stock market, thousands of companies. Expense ratio as low as 0.03%, super cheap. Schwab U.S. Broad Market ETF, SCHB. Another solid option with an expense ratio around 0.03%. Great for broad exposure and low cost. Fidelity Zero Total Market Index Fund, FZROX. Zero fees, yes, zero. A great choice if you're starting small, but want maximum market coverage. iShares Core S&P 500 ETF, IVEV, tracks the S&P 500, focusing on 500 of the largest U.S. companies. Expense ratio around 0.03%, widely used by investors. Investing in these index funds with a long-term mindset is key to growing wealth in 2025 and beyond. Don't panic with short-term market ups and downs. Remember, the stock market historically grows over time. Set it and forget it. Regularly invest. Let compounding work its magic, and avoid high-fee funds or risky get-rich-quick schemes. If you're ready to start, open an account with platforms like Vanguard, Fidelity, or Schwab, all great for beginners. Look for accounts with no minimum or very low minimum investments. Start with what you can afford, even $50 or $100, and build over time. That's it for today's video. If you found this helpful, hit that like button and subscribe for more smart investing tips. Got questions or want me to cover other topics? Drop a comment below. Thanks for watching StockWisp.